Welcome to first and only Saas Talk Show featured on LinkedIn, and this is a Startup Edition episode where I cover founders, entrepreneurs making impact in this world, and today we're going to talk about product market fit. It is essential to have quantitative approach and clear understanding of what product market fit looks like before you invest in growth. We'll go over important customer retention and sustainable growth and how to chart those metrics to determine your true product market fit. And we'll be joined later by Aman, Verjee, general partner and founder at Practical Venture Capital. Aman has more than 15 years of experience in C-suite in high growth and technology companies, including PayPal, Sonos, and eBay. And among his experience, Aman ran PayPal's finance team and eBay's product analytics team. And his team measured churn and customer engagement and help the business operators to optimize for customer satisfaction and retention and for financial success. And if you're watching the show for the first time, please check out our LinkedIn company page to access more episodes. And now, let's dive in today's topic, product market fit. Some experts would say that you have achieved product market fit when your customers are totally satisfied. But according to others, this is not a realistic possibility. Customer expectations will always increase. It's human nature. And to quote Jeff Bezos, we did not ascend from the hunter-gatherer's days by being satisfied. People have voracious appetite for a better way. Casey Winters is the Chief Product Officer at Eventbrite, and in his recent article that Winters wrote, he said that the product market fit is not when the customers stop complaining and feel satisfied. Instead, he said that product market fit is when the customers stop leaving. Winters argued that measuring retention is a better sign of product market fit than measuring satisfaction. And measuring retention can be a fairly simple process. So if you perform cohort analysis and graph the curve over time, you'll begin to see where you stand. But what actions do you measure and establish retention? Winter says that this should be a key action that the customer takes that best represents the product value. Example in Pinterest measures its retention based on the user saving their first piece of content. And then patterns emerge that show users browsing on a weekly basis. And this allows Pinterest to have a measurable action and desired frequency to use when determining retention. Grubhub key measurable action was having a user order food online. Again, a pattern emerged that most users order food once or twice a month. But once you have a key action and design frequency, you can plug them into a cohort graph. And the key action will be the y-axis and designated frequency of x-axis. Winter points out that it's normal to see a sharp drop at the beginning, but products that have a solid product market fit will show a solid line of a consistent value that they deliver to their customers. So once you retain customers, you're done, right? Well, not really. There are plenty of startups with excellent customer retention that still struggle to grow. Product market fit cannot be measured by retention alone. As Winter points out, customer retention has to create sustainable growth, which means the rate of retention matters. And there are a few key acquisition loops, but most are definite on the retaining customers. You need existing customers to talk about your product and attract other people. That's the key. You also need them to directly invite people to try your product, which is product-led growth strategy. And many retained customers create content that can be shared by the company to attract new customers. And the final loop, some retained customers make the company enough money that the company can use that funding to invest in the paid acquisition or sales loops that pay off over time. Winter says that its sustainable growth is measured by one or more of those loops, growing the size of your monthly acquisition cohort month over month with flattened retention curve. So a true product market fit is the best measure by flattened retention curve